volume candles are actually showing a warning signal for the bulls. Now, if we go and visit our previous cycle, where the double top has occurred, what we notice is in the first top or peak, we saw large volume candles that are both green and red. But in the second one, you can't just help but notice that the green candles were getting thinner and thinner, especially at the end phase of the cycle. And the red candles started to pick up traction. If we go visit our cycle, we have one local top and another local top that swept the previous high. That shows some minor bullish trend or moderate, but we also have to understand how this bullish trend played out. Is it some kind of manipulation maybe, right? And that's the signs that you can actually, deduce from this analysis. The first local top had large green candle, similar to the first peak in the previous cycle. The red candles were also moderate in size, but the green candles dominated. But now what we're saying is a shift in sentiment, is a shift in how the game is played. The green candles, especially at the end phase of the second peak, has shown a drastic reduction in size. The red candles are starting to pick up their sizes and showing some kind of force. So the size of the candles, think of it as you're applying force, right? So imagine you push somebody forward and somebody else is pushing somebody backwards, but you pushed him stronger, right? So that the candle there would be larger, and therefore the person is gonna move forward. But what we're seeing here is there's a push down to the downside that is larger than the upside, at least for the short term. By the way, I'm Mo. I turned a modest crypto portfolio into 6 figures this cycle. Not by luck, but by discipline and data. On this channel, I will help you avoid traps like this one and see the real side of this market. So if you enjoy honest, data-driven crypto talk, hit the like and subscribe button. Let's move on to the video. So yeah, I think we should continue to analyze the volume candles and see if strength can pick up again. Now, if you do go to the volume footprint and we go to the weekly, I just want to grab your attention to a sell wall that is happening, a distribution zone. I talk about the volume footprint in my other videos. I'm not going to explain it well here, but I just want you to know there's actually a sell wall that is happening around between $110,000 and $120,000, right? You can see that through the huge red zones in that phase. So for example, what volume footprints can tell us is the total amount that is being traded here, the total buy, the total sell, and the delta. The delta is the total buy minus the total sell. If it's positive, it's good. If it's negative, it's bad. But it can also tell us a story. So if you notice here, there was selling at the bottom but buying at the top, which means fear and greed. That's a good sign for the market to go up. You also see signs of huge greed and sometimes signs of distributions at the bottom, which is very, very, very bullish signs. But we're not seeing that here. Here we're seeing the damn opposite. There's a huge sell wall. In that other period, for example, in this period, what you can say is there was an indecision period because the reds and the greens are all over the place. So people just were not sure which side to go to. All right, so let's go back to our volume candles. If we take the 3-day chart, we can also have the similar analysis to a more short-term view. For price to pick up and possibly make new highs or even just sweep the previous local high, we do have to see larger buying power. Right now, the red candles are dominating by huge margins, which leaves you to wonder, is the cycle over or not? Why are there very huge red candles and no meaningful green ones? Because every time we try to go up, some people are profit taking largely and pushing the price down. For example, if you do want to see an upward move, this is what it has to look like. When you at the bottom consolidation phase, you do have to see more larger green candles and a continuation of that trend, like this. So think of these volume candles as pillars. The larger they are, the more they're able to hold price above a certain level. But the thinner they are, the easier they are to break. Now, we were able to hold this very well because there were some nice pillars, and this was a nice volume to the upward, which can signal a trend continuation here as well. But here we start to get very, very much weaker, and especially here. Those pillars are nothing comparing to those pillars. So this is why I'm afraid to see Bitcoin go lower. Now, it is possible to make money on the way down as much as it is possible to make money on the way up. For example, you don't even have to use Binance and pay interest rate. You can just sell futures at no cost. And actually, if you sell futures, futures price for long dated futures are actually higher than current Bitcoin price. And by time, actually, that future price goes down to meet Bitcoin as the future expiration date gets closer. So you can make up to even 3 and 4% and getting paid for being short instead of having a margin account on Binance and trading spots and borrowing Bitcoins. So I prefer to go short that way. Now, nothing in this video is financial advice, so please do your research and study the market conditions. This is just one idea, one frame of the picture. This is what we do on this channel. We try and see all the points of view that we can take and be able to paint the full picture. So if you like this type of content, I do volume candle weekly updates. Do like and subscribe, and I'll see you next time.